Hello and welcome to Capital Market, another edition. This is Will Ibong. Here are the highlights for the week. But before we look at what happened in the local space, let's take a peek at the global markets. In the US, let's start with Europe. Europe stocks took a hit on Friday amid growing tension over possible new US tariff letter to the European Union. The stocks Europe 600 dropped 1.1%, while we'll see Germany's DAX and France's CAC 40 about 0.9%. Dropping 0.9% each, and the UK FTSE 100 also dipped by about 0.4%. Now, the pullback follows fresh US tariffs on Canada and rising fears that the EU may be next. Investor sentiments turned cautious after a week of record highs in UK stocks. And let's look at Asia now, where we see markets across Asia ended mixed Friday after US President Donald Trump announced fresh 35% tariffs on Canadian imports starting August the 1st. In Japan, the Nikkei 225 fell 0.19% to close at 39,569 points, while the Topix edged up 0.39%. Hong Kong's Hang Seng Index dropped 0.81%, but mainland China's Shanghai Composite held steady, ticking up 0.01% to 3,510 points. The new tariffs are fueling investor caution in global markets. Now let's look at the U.S. How did they perform there? On Friday at the close of trade, we see stocks slide as Donald Trump escalates tariff trades. Tensions in that region. U.S. markets closed lower on Friday after President Donald Trump imposed a 35% tariff on Canada and hinted at broader hikes. The Dow fell 279 points to 44,371. S&P 500 dropped 0.33% to 6,205. The Nasdaq eased 0.22% to 20,585. Now, the dip followed Thursday's record highs, but investor mood turned cautious as Trump threatened 15 to 20% blanket tariffs on more countries and offered no update on planned EU duties. All major indexes ended the week lower, with the Dow down 1%. Traders now await Q2 earnings and key inflation data next week. Let's turn to the OTC unlisted markets here in Nigeria. Back home, we're seeing the NASD index rose 1.02% to 3,433 points, with market capitalization steady at 2.01 trillion naira. Trading activity surged as volume jumped 660% to 21.29 million and value rose 67% to 145.56 million across 141 deals. Top gainers include Air Liquide. We're seeing other stocks in the insurance space moving out. Food Concept and Lagos Building Investment Company. Afriland Properties was a sole decliner there, shedding 17.84%. Most traded stocks were CSCS, the Central Security Clearance System, Friesland Campina Wamco, and Capital Bancorp, reflecting strong investor focus on key blue chip and financial assets. Let's move down to the equities markets. That's the Nigerian stock market. You see the NGX all-share index rose 4.26% to 126,149.59 points, hitting a historic high on the exchange, while market cap gained 3.47 trillion naira to hit 79.8 trillion naira. Despite the rally, trading volume and value declined to 5.39 billion shares and 107.81 billion naira, while deals increased to 134,390. Insurance and banking stocks led sector gains of 13.83% and 12.49% each. FTN, Cocoa, Red Star, and Omatech topped the gainers chart with over 60% weekly growth. Losers were led by Legend Internet, IEI, and O&O. We see top traded equities included Access Holdings, Japol Gold, and ICO from the insurance sector, showing strong investor interest throughout the week. Now, to discuss this and more and to give us details and insights into what's driving sentiment in the market, we have the Chief Research Officer at Invest Data Consulting, Mr. Ambrose Omodian. Good evening, Mr. Ambrose. It's good to have you on the show.
Thanks for having me.
Mr. Ambrose, It's a roller coaster week at the NGX. It's surprising. One minute you're looking at the stock, and the next minute you see it jumping, and you're wondering, are you still in the same market? Well, we just hit a record high, and we see it crossing 126,000. Numbers or figures we've never hit before on the NGX. But what's underpinning this bullish momentum? And one would wonder, is it sustainable?
No, to start with, in any market of the world, no market remain up or down. The beauty of stock market, the market has to rally and pull back. But it's for the investing public or investors to know that, yes, you must have your plan so that you can trade your plan in this market. As you said, as the market is jumping, people might also jump into the market at the wrong time. People that earlier, that are in the market will also be responding to the bank. That means you don't ask where is the market going, what are the factors behind the movement. If those factors are sustainable, it shows that the market will still go further up. If, okay, at the time that people take profit, pull back, you must understand where is the market going. That is why, at this point, it's not about fundamental alone. Look at what is the sentiment, what is the psychology of investor at this point, because if stocks are hitting new all-time high, like because the index have crossed just 1 week, almost 5, various, we'll call it a circular line, for almost 5, and a week, tell you that from 121 to 126,000 in just a week, that liquidity is in the market, confidence is there, but at this point, where is the market going to? I believe that it's time for those that are designing as investors, you take your profit, and those companies that are yet to move, it's time to start keying into them. But one thing is that investors should have in their mind is that we have not experienced such rally in our markets since inception. But as you said, what are the factors behind this rally? One, since this government came on board, 2023, markets have been in up direction. Go back to 2020, where we had COVID-19. Till now, markets have been up direction. We have to, what is the factors behind this rally? One major factor is that companies on the exchange are beating the expectation. And because of that, they are paying investors increased dividend on a yearly basis to reflect the company performance and now supporting the price of this company. But for investors that are really designing, look at, I bought a stock like GT, for example. I entered GT when it came to the market about 2 years ago at 10 naira. It moved to 25, it came down. It went to support 25. Now I have supported the last week was 56 naira. It was the peak before now. Now trading around 94 naira per share. What will you do? Is this the time for you to jump in and buy more here? For those that have bought GT at 10 naira, you say you're a long-term investor. The market has moved from 10 naira to 94 naira. You are saying you're a long-term investor. When will you take your profit? For me as a trader, this is time for me to cash out some money and go to other stocks that had the same fundamental GT had, that this have moved from 10 naira to 94 naira. That means it's not the time for people to be just say, you start holding. What are you holding to? Move to another stock that had that potential. For example, again, let's look at the life of Zenith Bank. Zenith Bank for almost 25 years, consistently on a quarterly and yearly basis, is growing their earnings and also reflecting on their payout. That means if now Zenith Bank is around below 70 naira, that move from as low as that 10 naira to this price, where is it going? Will you buy Zenith Bank at this point and GT at this point because of their dividend payout? Where will you be? Is it because of bank recent CBN Forbearance issue that Zenith Bank is low? Or is it that, they're going to pay trade dividend? You ask yourself a question. You go back to, let's say, the life of NACO. I'm not giving an example, not that I should buy them. Example of NACO. NACO have consistently also paid dividend to their shareholders. Because in NACO have, for example, paid 92 to 95% of their earnings as dividend. While the same companies in that same industry are paying less than, what will I put there? Is it 10% of what NACO is doing? And their price is around 60 naira, 40 naira. And they pay you 50 kobo as dividend. While NACO is paying you almost 6 naira for so that is selling for 97 naira. Where will you be? That is why, as an investor, not just looking at the price alone, what will further drive the price or sustain the price? Because these are two things. If price is not going up, what will sustain it? If a company is consistently paying you dividend, that means price will be sustained.
Okay, Ambrose, the question now is, at the rate where the trajectory of the market right now, is this bullish momentum sustainable? Yes, you talked about investors knowing when to exit the market, not to be greedy, but is this momentum at the NGX bullish? Are we heading for a correction that will be too hard, a greater fall that investors will have their fingers burnt?
I'm not expecting a great fall in our market. Well, let us see a kind of a somersault in our policy tomorrow. But if the policy that brought market where it is still intact, like I always said, that it's not for government to see that if we are seeing improved macroeconomic data as a result of our rebase of inflation, rebase of GDP, we are seeing positive number, will it be sustained? It's not to rebase and you see a better figure, you'll be smiling. What will come next? What is government need to sustain these better numbers we are seeing from that angle? It's very, very critical. Let's go down. Two, again, what is the company doing to sustain their price? We have seen impressive Q1 number in 2025. We have seen impressive full year in 2024. Will that trend be sustained? Ask yourself a question. Nothing has changed between 2024 to date. That means most companies have performed excellently in the previous quarter or year are likely to do the same thing. And if we are seeing this, especially the exchange rates, that is relatively stable, companies can now confidently plan with this. That's why I say government has to sit up. If you are doing intervention, if you are mopping up, you have to do it better now. Because people already see that we are seeing relatively stability. Not overnight, we'll not see another jump again. It's going to bring the economy down. Now, what have you done so far to keep it like this? Do it better now. That is why, as a good government or any policy maker, a company, you review your strategies to know if it's a quarterly you are doing or monthly. So that what I'm doing, what will I sustain? How will I sustain it? That is part of government. For you and I, as a player in the market, you said to make profit of 30% in the market. You have made 100% now. You are still trying to make 200%. I will tell you that you are greedy. You are the type that will get your finger burnt. Why? You have made money, exit the market, so others will buy, go to another store that are yet to move. Because no market remain up. At the beginning of the I said that no market remain up or down. But understand the market oscillation and know when to buy right and sell right.
Okay, so looking at the trading activity or the close for the week, we're seeing that trading volume and value were less when compared to the previous week, except for deals where we saw a bit more activity there. But in terms of volume and value, it was lower compared to the previous week. Where does this tell us right now about where investors are putting their money?
Actually, investors are looking the way. You can see banking stock during the week was up. That means, let me say, financial sector. We saw what is happening in insurance and banking sector. Then we see another sector that is very active is the consumer goods. Why consumer goods? Because government policy have supported the exchange rate. And these companies in that sector have posted loss in the previous year and quarters. But now, they are bouncing back since 2025, first quarter, and last quarter of 2024, which is that it's a sign that they are coming back. And for you, this is a company like, for example, now, the life of Unilever, I thought I saw at 18 naira before. Now it's around 56 naira. Where is it going? You know that it can touch 60 or 70. But companies that have not touched their all-time high, they are there. You have to play with caution. Because at that point, profit can come in at any time. And also, ask yourself a question. The company has fundamentals to support the price now. I mentioned GTB, I mentioned GTB, I mentioned Zenith Bank. They have fundamentals to start going up. But you need to be careful that a company that does market sentiment. For example, I don't want to call the name of the company that market sentiment has moved them from nowhere to where it is. And now, as an investor, I want to jump in at this point. I'm telling you, you are taking a high risk. Yes, I know that the market is risk involved, but at this time, your risk is high. Because if I move from as low as 10 naira to almost 12 naira, 15 naira, you want to buy at this point, you are not serious. I've said that we are not serious because at this time, when it starts falling, it will fall like a pack of salt. Because nothing will have to talk down. Because dividend is not coming from there. Their numbers are not positive yet, and you are buying at. I know. That's why you must understand the market where you are putting your money. So that at the end of the day, you will smart to the bank. Not at the end of the day, you'll be crying in your room that I entered at the wrong time. No. That's why timing in market is very, very important. At this peak, I would advise that where you have hit profit, cash your profit out. And also, for me, I think that if all of us continue to hold stock, who will sell to each other? You mentioned that the volume for this week was low compared to the previous week. Because most of us in the market are holding tight. People that want to buy are not seeing, nobody's willing the stock. And the day that you hear one thing, all of them, like one of my friends will say that if you're in a party, and the music is playing, everybody's enjoying themselves in that party, you are dancing. A wise man not say, okay, oh, I'm tired of this music, let me step out of the door. He just dance out. He will go easily without any stress. But when they off that music, everyone want to leave that room, the door will be jam-packed. That's why, as a wise investor or trader, as you are seeing this market going up, what you do is just cash out your profit. You might not set down, like I tell people that, take your profit. Because no market, let me tell you one thing now, I just remember something now. When market was up in 2008, I was in this market. No markets were bubbling. All of us, at March, I remember March 31st or 28th, market touched the all-time around the 65,000 mark then. Everybody, the next week of the next day, that is how market started coming down. I know that yes, a lot of you started coming down. It did for 2 years. Markets are coming down. People say, oh, but those are wise. Sold at a good price. But you can't say you must sell at the biggest price. But if you make profit and go, that is why we need to trade our plan. Because if you're in this market without plan, you have been tossed up and down by bad work on your phone. Before you enter any market, any trade, have a plan and trade your plan. I think that we have stopped.
Okay, I just hold that thought there. But before we go on a quick break, I just want to briefly tell you mentioned the banking stocks. This CBN forbearance that we see that lift in terms of the additional tier one capital that has been waived to June
Yeah,
2026. So it's no longer, I mean, to March 2026 and no longer June the 30th,
yeah.
taking effect June the 30th. This has not dampened investor sentiment. Rather, we've seen bullish momentum. We see the banking stocks trading, closing the week up about, is it 13% or 12%? What has this CBN forbearance told us about the banking sector?
Two,
Very
two,
quickly.
two things very important here. One, it shows that the regulators are not sleeping. Let me come from there. Two, investors know the state of the banks they are playing. And also we know that now forbearance is not that the banks are sick. I mean, either they've lent to a particular client or their customer more than what the regulator should lend to them. If tomorrow what they lend to pay them off their normal state. But now that CBN is kind of putting a light on them. And most of them have gone back, to the back, and also they've done a lot of diligence on their side and put their two books in order. That is that those banks are strong. And that means those banks that were saying that don't invest in outside Nigeria, sure, are not paying dividend for, those banks are going to pay dividend. Why? Because most of them have solved their issue with CBN because the person they lend to has paid them, and that, for me, it shows that for agro regulators now that are active, market know the state of the banks. That means two things are there. There's confidence on the part of investor that their banks are strong and healthy. The regulator tells them, I'm not hiding anything for you. I'm telling you what is happening in the banking sector. For me, it's a good one for the market and for the economy.
Thank you so much, Mr. Ambrose. We'll take a quick break now. When we come back, Capital Markets continues. Do stay tuned. Welcome back. If you're just joining us, you're watching Capital Market Live on Channels Television. I'm Will Ibang, and we've been discussing the markets, the equities market, and the surge in the all-share index. But before we continue, with the markets, we will just check in on the Purchasing Managers Index, which came out this week, and the CBN, according to the CBN, we see that warning that rising input costs could drive up inflation, although we saw a rise in business sentiment to 52.3%. So 3 points rather. In its June 2025 PMI report, the CBN says businesses are paying more to operate, especially in agriculture, but haven't passed those costs on to consumers yet. Agriculture recorded the widest input output price gap at 9.8 points. Industry and services also showed cost pressures, though less severe. The CBN says continued cost absorption may not be sustainable and could lead to price hikes soon. Despite the pressure, economic activity expanded for the 6th straight month, and the composite PMI stood at 52.3 from 52.1 in May. We still have Mr. Ambrose Omodion, Chief Research Officer at Invest Data Consulting, here with us in the studio at Lagos. Mr. Ambrose, the CBN is warning us about impending inflation or more inflation, rising inflation as a result of input costs, rising input costs. And he's mentioned something that the companies, the businesses are absorbing the costs right now, are not passing it on yet to the consumers. And from what they said, this is not sustainable. What do you see for businesses? Are we about to be hit with another wave of inflation if businesses decide to let loose?
Yeah, I will start by saying that it tells you that the rebase inflation is just giving us a clear state of where we are heading to. We have experienced some pullbacks in inflation or kind of a slowdown before now. But for CBN to be pointing out that yes, that companies are kind of absorbing the cost of for now. How will I I want to try to marry it together because for now prices of goods in the market are not down; they are still high. Yeah, that's why I was saw a little slowdown, in inflation figure in the previous month before now. Then, if already they are thinking that we're going to see kind of a rebound in inflation and up direction, it shows that the market players and also the investors should also think wise. And I will tell you, definitely, the companies will pass this high cost to consumer, and that will not show on inflation. But for those that are market players, which sector or industry that even when they pass the cost to consumers, the companies and industry will still post a better number. Because I tell you that any time, any day, the price feed on earnings. If that is already we are given a sign, it is that also the likely MPC meeting coming, we'd like to see also a hold from indication of what I'm just looking at now, that might not see anything caught in the next time, because we have experienced 2 meeting or 2 policy committee meeting that left inflation interest rates unchanged. They're likely to do the same thing in this month of July until let's say the month of September, to see if there will be any change or not. But if things change, because if what is happening globally is also sustained, that Trump and his policy on trade is also twist to a direction that some economy will start looking world and start producing and start pushing out to the same market, I might say that yes, inflation generally will start coming down, but it might not be immediately. If they're telling us already in Nigeria that from CBN that we should expect kind of an uptick in inflation going to the future, is for the market to start planning that way. That's why I said this market that is running like a mad cow, investors to also trade with caution, because I believe that if we start seeing numbers and these numbers are not as expected, there will be profit taken in the market. I said earlier in this program that nothing has changed so far, apart from the news of inflation coming in. And don't forget that during the headwinds, companies on Nigeria exchange also posted a positive number. That's why I said expect to see a mixed market in this month of July, towards the end of the month, because as numbers are coming, sector rotation will continue in the market, because you want to see will these companies sustain these numbers. But if a company has sustained a number throughout 2024, first quarter, and you see the second quarter also looking powerful, it shows that they are going somewhere. Because if there's inflation or no inflation, they survived in 2024. We will know that inflation was on the peak, at the peak in 2024, before we now started doing our rebates and all those stuff. If companies can survive then and they put them, it's going to contribute. For investors, let's have at the back of our mind that we need to also watch your economic data to see where you can navigate the market and stay, in a winning side. Because the beauty of stock market is that let your winning trade be more than your losing trade. Nobody will guarantee that you have 100% all trade, successful. Let their winning be more than that. That's how to make money in the market. I believe that when all the police start coming, investors will have to adjust their position. But for me, the good thing that I believe that the government should do, or the economic should do, if we are seeing that the global economy is already wobbling, we need to make our own economy strong to attract foreign, not just using interest rate, but recent time I see that the money market and other trade are coming down, which is good for the economy. But if you really want to drive Nigeria economy to achieve your 4% GDP, you need to also make sure that we have cheaper funds. But if inflation is making its ugly head again, the possibility of getting cheaper funds is slim, because you need to increase your rates.
Speaking of GDP, we're still expecting the rebased GDP from the National Bureau of Statistics. That is yet to be out. Or when should we expect that? Do you have any news?
No. Actually, we're already in the first month for the third quarter of the year. As from second month perspective, because before the third, in Nigeria, our consistent in releasing data is not there yet. But only that can use it to plan and about. It's not where you can plan with our consistent intent on it. But ideally, for Q2 that don't end, there should be in the market, in the economy, or in the space between now and next
what we have is just for the last quarter of 2024. We don't have the first quarter GDP numbers, and that actually speaks volume, because investors are going to be looking to that. The macros, foreign investors are going to be looking at that to make decisions if they're going to be bringing foreign investments into the country. But basically, we're still waiting for the MBS to give us that information. But looking at other factors now, maybe companies that are dealing in this, talking about the PMI, how are companies faring in the midst of this? So the CBN is saying that the businesses are doing well, services sector, agriculture are doing well. What sectors, what companies have maybe probably posted their numbers that are probably, done exceedingly well? Or do you see them with the warning that the CBN is giving that input costs are rising? Do you see companies pulling back in terms of high cost of operations and revenue dwindling in the future?
It's possible, because when there is high cost of fund, it will affect. But like I said earlier, that at the beginning that we have experienced some headwinds in previous years, and companies posted good numbers. I said that Nigerian managers are very good in navigating any economic situation, and I'll give it to them. Even when the economy is tough, we still see positive number in some sector. That's why the government policy is very, very important. Like you just mentioned, the fear of inflation will not be a general thing. There are some companies or industries that can push their cost to consumer and people's better numbers. Right? Those people that are into essential goods and services that even though when they increase their price, there will be demand for their products. And also those that are also navigating that, yes, if we are not having imported inflation, that means we're having relatively, this exchange rate. That means we're able to manage it. Unless when we see another exchange rate going to 2,000, that is another way of having what we call imported inflation that will hit the economy. But if what we are saying now is sustained, company can plan. Even when we are thinking of inflation, we can go around it. But the most important is that if we really want to drive our economy to achieve our, 4.5 GDP, that would one from World Bank, the one that the government is also forecasting, we need to have cheaper funds to run our businesses. That's where you can employ more, you can expand, can engage people can. That is only. But if we continue to hike rates, that's why. From what they just said, I know that the next MPC meeting there will be debate that rates will be left unchanged or hold again, which is good. That means we are looking forward to see what will happen between July and September, where we'll have another MPC to see if for the month of February, May, we are seeing hold. But I don't know after 3 times, but unless things change generally, that will not see kind of a spike in inflation before we can see another hike. But relatively, other domain, we are seeing that people are leaving their rate on change, and some are cutting to kind of fuel their economy. We need to drive the economy. It's not just because capital market is up, the economy is up. No, we said that yes, the capital market is a leading indicator. We agree, but we want at least to show that the GDP will come up because that's the only way. And also, if you are increasing your interest rate, you are putting government on a tight corner. Cost of running their borrowing will be high because government are borrowing essentially as beyond expected. And if you increase your rate, the government will pay from their nose. I know that yes, they can print money, but I'll tell you that will not be good for government because your cost of financing your debt will be high.
Okay.
Yeah, we need to balance it.
Thank you so much, Mr. Ambrose Omodion. We do hope that the government listens and, the CBN, especially now that we need to see the lower inflation translates to the pockets of Nigerians and the receipts when we go to the market. So, Mr. Ambrose Omodion, Chief Research Officer, Investigator Consulting, it was great having your perspective on the show.
Thanks for having me.
Now, speaking of government borrowing, the federal government plans to borrow 1.76 trillion naira through treasury bills in the third quarter of 2025. The calendars are out. It was up about 12.8% as the increase from what we saw in the last calendar for the previous year in the corresponding period. According to the CBN calendar, 1.19 trillion naira in 364-day bills, 230 billion naira in 182-day bills, and 340 billion naira in 91-day bills. Auctions began July the 9th, where about 201 billion naira was raised. The next is set for July the 23rd. Separately, the DMO, that's the Debt Management Office, aims to raise 360 billion naira through FGN bonds maturing in 2029 and 2032, with auctions set for July, August, and September. The borrowings will help fund the 2025 budget and support debt sustainability. And that's a wrap on Capital Market. Do know that your investment is safe if only you get knowledge. Do stay safe and do stay savvy. I'm Will Ibong, and I'll see you next time.